Hello everyone, Brandon Thurgood here with this segment of OWA Live. Today we're going to be talking about the changing definition of risk in retirement. Now during your accumulation years, you were probably categorized into one of three different risk categories, either as a conservative investor, a moderate investor, or an aggressive investor. I would venture to guess that most of you are probably on the moderate to aggressive investor side, in those younger years. Because you understood that you needed to grow those assets and that you had a long period of time for those assets to grow. You were able to withstand a couple market corrections. But as you near those retirement years, or as you're in those retirement years, the shift and focus becomes less on trying to have the best performing portfolio, and it's more shifted to having a consistent performing portfolio. So you may, want to keep that aggressive mindset and still have, some of your funds in those aggressive positions to try to achieve the most growth if that's you. But we find that a lot of people in retirement tend to reduce their risk tolerance. If they were aggressive in those younger years, they might be a moderate to a little bit more conservative investor in those retirement years, because their concern is less on the growth of their money and more on the reliability of income and just making sure that they don't outlive their assets in retirement. So what are some of the things that you can do to help still maintain that growth in that portfolio, but also reduce the risk and provide yourself with some income, because you might need that income for 30 or more years in retirement. You never know, but that's a big question that a lot of individuals in retirement are concerned about. Am I going to outlive my assets? That's a big fear of many individuals. So some of the things that you might be able to do, if you're just solely focused on staying fully invested in the market, you need to be aware of how you're invested. Because if you are pulling money out of an account, and if you're still invested very aggressively, and those stock markets take a tumble, that withdrawal is depleting your assets in your portfolio very rapidly, probably so much so that it's going to be very hard to recover from. So some of the things you might be able to do is just raise more cash, right? Take more of your assets and put it into a cash type position, money market, and that allows you to still remain heavily invested in a little bit more aggressive mindset on the other side, if you have that. If not, you get into certain lower risk, more conservative to moderate positions that ultimately fit your risk tolerance. That's one of the ideas. Another idea is you shift the risk to another company. Now, what type of company is going to take the risk away from you? Well, that's what an insurance company does. They have products called annuities. There's multi-year guaranteed annuities where the insurance company will say, we're going to pay you a fixed interest rate for a certain number of years, guaranteed. Then there's fixed index annuities. Same mindset, but instead of a fixed rate, a lot of your growth will be tied to a certain indice. So if that stock market or that indice grows, then you get a percentage of that growth. Now, the awesome thing about annuities is that they protect you on the downside. So if the market's correct, or if they're down, your principal is safe inside of an annuity, okay? It's not guaranteed, it's not safe if it's in stock market positions. Now, that's something to keep in mind there. So you just want to make sure that your risk tolerance and the positions that you're in fit your risk tolerance as you near or in those retirement years. If you guys feel like you might be taking on more risk than you're comfortable with, feel free to reach out to us. We'd love to do a little portfolio analysis and just show you how much risk you're taking and if that's something that you're comfortable with. We want to make sure that people are invested within their risk tolerance levels. So again, reach out to us if you have any questions. We'd love to help you out. Thank you very much.